Picture a massive casino floor. You know the exact vibe, right? There are literally no windows, the lighting is brilliantly bright, the air conditioning is working overtime to fight off the scorching desert heat outside, and the slot machines are flashing 24 hours a day, 7 days a week. Now, it's a spectacle of entertainment for sure, but behind the scenes, well, these facilities are massive energy gluttons. So let's dive right into this. Welcome to this explainer where we're going to decode exactly how the gaming industry accounts for this massive footprint. Specifically, we're going to look at the strict, standardized rules that casinos absolutely must follow when they report their energy use to investors and regulators.
Okay, here is our roadmap for today. First up, the Casino Energy Challenge. Then, Step 1, Total Energy. Step 2, Grid Electricity. Step 3, Renewable Energy. And finally, we'll wrap up with the final energy dashboard.
All right, let's kick things off with Part 1, the Casino Energy Challenge.
So, casinos are a totally unique operational beast. They rarely, if ever, close. And because they intentionally lack natural light and ventilation, they rely incredibly heavily on their building's mechanical systems for constant heating, ventilation, air conditioning, what we call HVAC, and of course lighting. This relentless, non-stop demand means that fossil fuel-based energy production and consumption contribute to some pretty significant environmental impacts, like climate change and pollution. But beyond the environment, it also creates massive operational risks. I mean, think about it. If you rely this heavily on electricity to keep the games running, you absolutely have to manage your energy efficiency and availability carefully, or you're losing money by the second.
And that operational reality brings us right to the specific metric we're looking at today. The crucial point here is understanding SASB's standard SV-CA-130a.1. This is the official accounting tool used to measure a casino's energy footprint. It's really specific. It requires companies to disclose exactly 3 things: their total energy consumed, the percentage of that energy they pulled from the grid, and the percentage that actually comes from renewable sources.
Moving right along to Step 1, Total Energy. Now, the math required to standardize everything here is super rigid. You can't just take your random energy bills and report them in whatever arbitrary units they came in. No way. The standard dictates that all energy must be reported as a single aggregate figure in gigajoules, or GJ. To actually get there, casinos have to apply some very specific conversion factors. So for fuels and biofuels, they must use higher heating values. This basically measures the maximum amount of heat energy released when that fuel is burned, which ensures a true apples-to-apples accounting of its energy potential. And if they happen to be generating electricity from, say, solar or wind, those standard kilowatt hours must be mathematically converted into gigajoules. Everybody has to speak the exact same mathematical language here.
So the actual workflow for this step is pretty straightforward. First, the casino must aggregate all the energy they directly consume. And actually, pay attention to this crucial detail. This includes energy purchased from external sources and the energy produced by the entity itself right on site. Once you have every single drop of fuel, electricity, heating, cooling, and steam totally accounted for, you convert it all to gigajoules and you report that master total.
Okay, let's look at Step 2, Grid Electricity.
The second requirement of this SASB metric asks for the percentage of energy consumed that was supplied directly from grid electricity. The formula here is incredibly simple, but it's highly revealing for investors. You just take the purchased grid electricity consumption and you divide it by that massive total energy number we literally just calculated in Step 1. This shows exactly how reliant a casino is on the local municipal power grid versus their own generated power.
Which leads us perfectly into Step 3, Renewable Energy.
Now, not just anything counts as renewable. The standard very clearly defines renewable energy as sources that replenish at a rate greater than or equal to their rate of depletion. That means things like geothermal, wind, solar, and hydro. Biomass is also eligible, but wait, it comes with a massive asterisk. To actually claim biomass, the materials must be certified to a third-party standard, like the Forest Stewardship Council or the Sustainable Forest Initiative. Basically, you need the official receipts to prove it's actually sustainable.
And speaking of needing proof, there is a very common reporting trap right here. A casino cannot just look at their local power grid, see that the city uses, say, 10% wind power, and suddenly claim that 10% as their own renewable energy. Doesn't work like that. The standard explicitly says the renewable portion of the electricity grid mix that is outside the control of the entity is totally ineligible. To be eligible to claim it, the casino must have direct control. This means either generating the renewable power themselves on site or purchasing it through a power purchase agreement, a PPA, that explicitly includes the renewable energy certificates.
And that brings us to the strictest, absolute firmest rule in the entire standard. The rule states,
RECs and GOs shall be retained, not sold, and retired or canceled. Let's break that down. Think of renewable energy certificates, or RECs, and guarantees of origin, GEOs, as your official receipts for buying green energy. A casino might generate a bunch of solar power and receive these certificates. But if they turn around and sell those certificates to another company to make a quick profit, they can no longer claim that renewable energy for themselves. You literally must keep the receipt and retire it to honestly claim you are powered by renewables. No double dipping allowed.
Okay, let's pull all of this together in our final section, the final energy dashboard.
If you look at the official SASB standard table under Energy Management, you'll see our exact metric, SV-CA-130a.1. It clearly dictates these required disclosures: total energy in gigajoules, the percentage from the grid, and the percentage from renewable sources. This is exactly what sustainability accountants and auditors are staring at when they evaluate a casino property.
When it's all finalized, this creates a really clean compliance dashboard. You've got the massive total energy footprint fully standardized in gigajoules. Right next to it, the percentage showing reliance on the standard local grid. And finally, that hard-fought renewable percentage, fully verified by retired certificates and strict power purchase agreements. It looks like a clean, simple visual, but now we know it represents absolute mountains of complex conversions and strict compliance checks behind the scenes.
Which leaves us with this final thought to ponder today. As environmental pressures keep mounting and casinos look to reduce their massive reliance on the local grid, they are inevitably going to turn toward on-site solar and dedicated renewable power purchase agreements. But balancing those huge upfront investments with the very strict rules of retiring energy certificates, rather than selling them off, well, it creates a really fascinating financial puzzle. How exactly will this shift toward verified green energy change the bottom line of the gaming industry over the next decade? It is absolutely a high-stakes gamble, but thanks to this standard, investors can finally watch the cards being played. Thanks so much for joining me on this explainer.